All right, welcome back, YouTube stackers, collectors, and investors in precious metals. I'm the Florida Stacker, and in today's video, we're going to look at a published opinion piece covering thoughts on this year's silver squeeze. We'll cover the article, I'll add my own thoughts, and we can also hopefully gain a little bit more insight into where this silver squeeze originated, and potentially, of course, which way the squeeze is likely to continue going forward. So stay tuned. Let's talk about silver when we return. All right, welcome back, everybody. All right, so let's get straight to an article published by the Daily FX. I actually have linked this article in the video description section. You can find that down below. So if you're interested in reading the article yourself, there you go. It's right down there, along with some useful channel information. So it was shortly after the Reddit-fueled meme stock saga that the silver market landed squarely in the crosshairs of the online community. However, the supposed silver squeeze and the one that followed have been rather ineffective when compared to short squeezes on stocks like GameStop, ticker symbol GME, as well as AMC and the like. This article takes a look at the events surrounding the silver squeeze and, of course, some of the difficulties of shorting the physical silver market. So, silver, the opportunity metal, or as the article states, opportunity lying in wait. Now, in January of 2021, a finance focused community under the name Wallstreetbets, hosted on the popular online forum known as Reddit, caused quite the stir as news broke of their intentions to bid up the price of a number of targeted meme stocks in an effort to achieve what's known as a short squeeze. Initially, the orchestrated activity succeeded in drastically raising share prices, but the exponential rise was unfortunately cut short as retail brokers, most notably Robinhood, did begin restricting the purchase of the meme stocks, citing increased clearing firm charges as the reason. We all know that's bullshit. Thereafter, the Wallstreetbets community decided to turn their sights toward the silver market in an attempt to raise the price of a market that, as we know, those that have been stacking for a long time, has been rumored, not quite, it's quite factual, to be intentionally suppressing the price. So let's get to the first silver squeeze. The first and second silver squeezes were said to have been conducted via the world's largest silver exchange traded fund, or ETF, iShares Silver Trust, which has a $15.97 billion market cap at the time of writing. Okay, so 15.97 billion market cap. Did read that wrong. The idea was to buy into the ETF, which would force the fund to allocate new shares and, of course, to purchase physical silver to back those shares up. A sharp surge in interest in the ETF would lead to a sudden increase in the demand for silver, with the likely result of a sizable increase in the price for the commodity. A staggering $1 billion flowed into the iShares Silver Trust that Friday before the planned silver squeeze was to go into effect, forcing it to purchase an additional 34 million ounces of physical silver to leave the total stockpile at just over 600 million troy ounces. The candlestick chart below highlights the gap up in the price of the fund with an almost immediate retracement, bringing prices back to where they were before the massive inflows began. The surge in volume is circled in red for those down at the bottom, while the average true range, or ATR indicator, which depicts an average of daily price movement, you can see also peaked. Now, the superimposed orange line depicts the price of the continuous silver futures contract, which witnessed a spike but did fail to raise prices significantly, as was the expected outcome. The price of silver rose less than $4 between Friday, the 29th of January, and Monday, February 1st. Thereafter, for the remainder of February, prices actually dropped below the spike high, but they did remain above those pre-squeeze levels. So now let's look at Silver Squeeze 2.0. The second Silver Squeeze, or Silver Squeeze 2.0, took place on May the 1st. Although this fell on a Saturday, much of the price action was captured on May the 3rd. Looking at the chart below, this attempt had more of a muted effect initially, as price action did jump, but less than it did the first time around, and witnessed significantly lower volume as well. The second silver squeeze seems to have maintained somewhat of a choppy rise in silver prices, as opposed to a sharp parabolic move, which is usually associated with a squeeze. Furthermore, some of the recent silver price increase may very well be attributed to the depreciation of the US dollar, of course, with the massive stimulus and money printing efforts by many of the world's major economies. And for my newer viewers learning about gold and silver, both of the precious metals tend to have an inverse relationship with the purchasing power of the US dollar. To put it more simply, as the strength of the dollar increases, the value of gold and silver decreases, and vice versa, as can be seen in the overlay below. All right, so Wallstreetbets denies their involvement in the attempted silver squeeze. This is the final chapter of the article. Shortly after the news of a possible silver squeeze, there were many posts on the subreddit denouncing this move as members of the group sought to distance themselves from the silver squeeze idea. Despite having a consistent motive to the previous short squeezes, a protest against short selling hedge funds, there are a number of issues when it comes to shorting the silver market that make it different. As such, this has led to some to pursue the idea that this may have been a diversion ploy actually orchestrated by Wall Street itself and not by the Reddit group to derail the momentum and cohesiveness of the online trading community. So there was a theory floating around that the silver squeeze was a distraction from the actual aim of the group, at least the core aim of the group, which was more focused on short squeezes as it pertains to equities like GameStop and AMC, as well as some other stocks that you've heard in the news lately. Here also, the author does provide 3 reasons why a forced silver squeeze is also unlikely to occur. All right, so let's get to those reasons. And number 1 is going to be hedged short positions. A large amount of the short positions in silver are used to hedge against existing longs held on the London OTC market. These shorts are not naked shorts like the ones observed on meme stocks, where hedge funds took a one-sided speculative bet on price decline. Therefore, a surge in price is unlikely to force the short sellers to exit their hedge positions. Okay, what they mean here is that when it came to GameStop, the overwhelming majority of institutional investors were in short positions, meaning they had sold the stock, were going to drive the price down and repurchase the stock at a lower price to cover and net the profit. That's not the case with silver. As we know, JP Morgan is shorting the paper market, but going long in the physical market. So that's what they're talking about here. These positions are just different than those of the short squeeze efforts when it came to equities. Let's get to reason number 2, and that is the long-term sentiment going over and covering the silver precious metal. So as you know, a significant amount of hedge funds and money managers have been bullish on silver with the view that the coronavirus pandemic would inflate silver prices. Therefore, it's unlikely that there will be a large-scale forced buying to close out these existing shorts. And that just goes along with the first bullet, folks. Same reason we're stacking as individuals, right? As just normal human beings here on planet Earth. Those reasons also exist with institutions that have been looking to purchase or go long on silver due to the printing, due to the devaluation of the dollar, as well as just another investment play for many of these brokerage houses. So let's get to the third and what I consider to be the most important, and that is going to be the surplus silver supply. So a lasting supply squeeze is also unlikely given silver has been in surplus for the majority of the last 10 years. And with around 1 billion ounces produced and consumed per annum, temporary supply constraints may have been experienced, and they were, but in general, the silver market remains reasonably well supplied. All right, so that's the article. And I know many of you have varying opinions, so I'd be happy to read your comments in the comment section regarding this year's attempts to place pressure on the silver market in order, of course, to drive up those values or prices of silver. Of course, as a relatively new stacker of precious metals, now I'm only in my 3rd full-time year of stacking. I'll provide my own opinions first, and I'll start out with the negative. Let's go ahead and get that out of the way. And what I believe to be the major negative news for those who supported the silver squeeze effort, and I do agree with the author's sentiment here on this point, is that while silver was in short supply there for a brief moment, physical silver is not currently in short supply. Practically every online and local dealer that I interact with, and I do interact with them very frequently, is loaded up on physical silver today, making even a physical only squeeze, which is honestly not the way to do it. You really do need to squeeze the silver paper market, very incredibly difficult to pull off. What I mean by that is it would take a considerable amount of purchasing going on, much more than the small portion of our community, which does take place in the silver raids, which happen on some of the silver focused YouTube channels here in this community. It's going to take a whole lot more buying in order to move the needle. Now, I'll also go on to say that that fact is good for those actively stacking, like myself, right? Who are still stacking and not near retirement age or not looking to get out of silver, as there are plenty of options to consider when it comes to saving wealth in physical silver, such as modern bullion coins, of course, constitutional or junk silver, and there's also the larger silver bars. Also, with an abundance of silver locally as well as online, my dealers are talking about declining premiums over spot, which to me has been the largest obstacle in my own personal pursuit to overcome this year's challenges when it comes to stacking silver. In my efforts to add quality silver products, that's always the aim too, to my stack at a reasonable market price. So both a larger quantity of inventory as well as the declining premiums, that is the talk right now. I know we're not seeing that in a large scale move as of yet, but that is the talk with both of my local coin shops. Both of those do work against the aims of the silver squeeze movement, as spot price has once more found itself stuck in the $25 to $27 range, unable to break through those resistance levels. And as physical prices have largely relied on increased premiums over the last 8 months to elevate the real value or street value of physical silver, as supply remains high and premiums begin to come down, that will only decrease the efforts or the impacts of the efforts of those promoting the squeeze. All right, so now let me break down the positives and the efforts of those that supported the silver squeeze. The impact of your effort did not go unnoticed. And what I mean by that is the popularity of physical silver has definitely seen a resurgence of late. We did witness those limited inventories at many of our favorite dealers and dramatic increases in premiums over the last 8 months, which helped many not actively stacking but looking to sell or get out of their positions in silver with what I hope was a huge profit. While the impact of the squeeze may not have much life expectancy beyond 2021 without some other major catalyst, the impact of the squeeze when it comes to adding renewed interest for silver and also growing our small population of physical silver accumulators, that impact is undeniable. Now, for those of you that are looking to get out of your silver position, I just want to caution you that your window of opportunity, that door, may begin to close soon as inventories remain high and premiums begin to come down. So I am highly grateful to the Silver Squeeze community, the whole group of you, for your efforts in order to promote awareness of physical silver. I'd also like to ask any of you willing to leave a comment down below whether or not this year's squeeze is what brought you to my channel. And of course, ask you to give your own thoughts on the direction of the silver squeeze, the momentum behind the effort, as well as physical silver prices and premiums today. So once more, I'd like to thank you for watching today. I do appreciate each and every subscriber, and I'd also like to thank my loyal channel members as well for all of your efforts in supporting me and this community. I'd like to say have a terrific day and week, and I look forward to having you back soon with much more precious metals focused content. Keep stacking, my friends. Keep looking for those deals, and until next time, we'll see you soon.